Hey investor friends, I'm Michelle Markey and welcome back to my channel. If you haven't already, I'd love if you could please smash that like button and please subscribe because it goes a very long way with the YouTube algorithm, and we'll get more into some of the highlights from the 2022 Daily Journal Corporation annual meeting because Charlie Munger, one of the greatest of all time investors, dropped way more gems of wisdom, and I definitely want to cover these because they teach us so much in so little time. So some of the topics that I especially want to highlight from Charlie include his thoughts on Berkshire Hathaway's recent $1 billion investment in Activision Blizzard, which we know Microsoft is trying to acquire, as well as his thoughts on crypto, and also how the wretched excess and bubbles in the stock market will lead to some unwanted consequences, and what he thinks about Costco, and also the evolution of business moats as it relates to Apple and Google / Alphabet, and also his thoughts on passive investing and what his advice would be for young people who are trying to invest now, and his comments on human psychology and his secret to leading a happy life. So there's plenty to cover, and I might even need to do another video because there's just so much wisdom that he shared, and I think it's very important for us to carefully listen to Charlie's words because he doesn't mince words, and I think we'll get a lot out of what he says. So when Charlie was asked if Berkshire had any inkling that Microsoft was going to put a bid on Activision Blizzard, and also what his thoughts were if there were value in the Metaverse or if it's all just hype like Bitcoin and crypto, Charlie made it seem like he initially wasn't going to have much to say, but then he had a whole lot to say about video games and the Metaverse, as he said the following.
I've got no comment about that except that I really like Bobby Kotick, who's one of the smartest business executives I know. And I do think gaming is here to stay. But there again, I'm an old man. I don't like a bunch of addicted young males spending 40 hours a week playing games on the TV. It does not strike me as a good result for civilization. I don't like anything which is so addictive that you practically give up everything else to do it. Well, without any metaverse, just the existing technology of games on the internet, Activision, Blizzard, and a lot of other companies have gotten very large. And some of the games are kind of constructive and social, and others are very peculiar. Do you really want some guy 40 hours a week running a machine gun on this television set? I don't. But a lot of the games are harmless pleasure. It's just a different technique of doing it. I like the part of it's constructive, but I don't like it when people spend 40 hours a week being an artificial machine gunner.
And while we're on the super fun buzzword of crypto, someone asked if he's willing to admit that he missed something and his thoughts on the Fed creating their own digital currency, to which he said,
well, I certainly didn't invest in crypto. I'm proud of the fact I've avoided it. It's like, some venereal disease or something. I just regard it as beneath contempt. Some people think it's modernity, and they welcome a currency that's so useful in extortions and kidnappings and so on, tax evasion. And of course, the envy, everybody has to create his own new currency. And I think that's crazy too. So I'm not having any. I wish it had been banned immediately. And I admire the Chinese for banning it. I think they were right, and we've been wrong to allow it. No, the Federal Reserve could have a currency if they want one. That would be we've got a digital currency already. It's called a bank account. The banks are all integrated with the Federal Reserve System. We already have a digital currency.
While some people might just easily dismiss Charlie Munger as being an old fogey who isn't getting with the times, other times it feels like he might be one of the few grown-ups in the room who's been warning us of the big troubles that are coming with the wretched excess and bubbles in the stock market and other places in society, as he's warning against addictive behaviors with video gaming and gambling in the stock market. And even though we might not want to hear the tough love that he's giving us, it might be really needed at this point in time, where he cites some examples of some of the wretched excesses as follows.
Well, certainly the great short squeeze in GameStop was wretched excess. Certainly the Bitcoin thing is wretched excess. I would argue that venture capital is throwing too much money too fast, and there's a considerable wretched excess in venture capital and other forms of private equity. We have a stock market which some people use like a gambling parlor. And the transactions of the people who love the gambling parlor aspect of the business and those who want to make long-term investments to take care of their old age and so forth. I mean, you muddle it in one market, And it goes out of control because the stock market becomes an ideal gambling parlor activity. I don't think that ought to have been allowed either. If I were the dictator of the world, I would have some kind of a tax on short-term gains that made the stock market very much less liquid and drove out this marriage of gambling parlor and legitimate capital development of the country. It's not a good marriage, and I think we need a divorce. Well, you'd have to have some kind of a rule that just made stocks way less liquid. We have all the real estate we want, all those shopping centers and auto agencies and so forth, without having a perfect liquid market. We would have a stock market that was way less liquid. When I was young, we had a stock market that was way less liquid, way fewer shares. When I was at the Harvard Law School, we seldom traded 1 million shares in a day. Now we trade billions. We don't need a stock market that liquid. What we're getting is wretched excess and danger for the country. And everybody loves it because it's like a bunch of people get drunk at a party. They're having so much fun getting drunk that they don't think about the consequences. We don't need this wretched excess. It has bad consequences. You can argue that the wretched excesses of the 20s gave us the Great Depression, and the Great Depression gave us Hitler. This is serious stuff. We should, but it's awfully hard. A lot of people like a drunken brawl, and so far those are the people that are winning. And a lot of people are making money out of our brawl. Well, I think eventually there'll be considerable trouble because of the wretched excess. That's the way it's usually worked in the past. But when it's going to come and how bad it will be, I can't tell you.
But let's assume the peak valuations in the market are not indicative of a bubble. Are old school Ben Graham style valuation methods dead?
They'll never die. You can't. The idea of getting more value than you pay for, that's what investment is. If you want to be successful, you have to get more value than you pay for. And so it's never going to be obsolete. Now, you can get a whole body of people that don't even know what they're buying. They're just quotations on the ticker. I don't think it's helpful to have. Think of the past crazy booms and how they worked out. The South Seas bubble, the bubble in the late 20s, so on and so on. We've had this since the dawn of capitalism. We've had crazy bubbles.
And someone asked, how should new investors think about Costco? And is it part of the current high valuations and the bubble that Charlie's talked about before, given that it has never traded at a higher price to sales or price to earnings multiple? And Charlie said,
well, that's a very good question, and I've always believed that nothing was worth an infinite price. So at even an admirable place like Costco could get to a price where you would say that's too high. But I would argue that if I were investing money for some sovereign wealth fund or some pension fund, and a 30, 40, 50-year time horizon, I would buy Costco at the current price. I think it's that strong an enterprise and that admirable a place. Now, I'm not saying I can't bring myself with my habits to pay these big prices, but I never even think about selling a share of Costco just because it's selling at a high price. If you stop to think about it, I bought at Christmas time a flannel shirt, a bunch of flannel shirts at Costco. They cost $7 each, more or less. And it was a soft flannel, and it was better, and so forth. And then I bought pants. I think they were Orvis pants. And I paid like $7. They stretch around my waist, and they're partly water resistant, what have you. Costco is going to be an absolute titan on the internet because they got curated products that everybody trusts and huge purchasing power on a limited number of stocking units. I'm not worried about, I'm not saying I'm buying Costco at this price, but I'm certainly not selling any. I think it's going to be a big, powerful company as far ahead as you can see. And I think it deserves its success. I think it has a good culture and a good moral ethos. And so I wish everything else in America is working as well as Costco does. Think what a blessing that would be for us all.
On questions related to the durable competitive advantages or moats of small business versus big business, and what he thinks about Apple and Google's role that they play in the US, as well as if there's anything to be concerned about with antitrust ruining some of the business moats of these big businesses, Charlie said the following.
I'm not trying to weaken the internet companies of the United States. I like the fact that we have strong national champions that are big, strong companies, and I think other nations are proud of their big, strong companies too. I don't think bigness is bad in the end. I don't want the whole internet to be dominated by foreign companies. I want big, strong American companies that stand well in the world. So I'm not as worried about antitrust aspects of the internet. In a sense, we need a big business. It makes sense to have something like Apple and Google as big as they are and serving as well as they're doing. And just as I didn't mind AT&T when it ran the whole television network, I don't mind Apple or Google being a big company. I'm not worried about having some big companies and a lot of small ones. I think that's our system. If you stop to think about it, my way in life was not predicting little short-term differences between the Russell Index and the Standard & Poor's Index. I don't have any opinion about which index is better at any given time. I never even think about it. I'm always just looking for something that's good enough to put Munger money in, or Berkshire money in, or Daily Journal money in. And I figure that I want to swim as well as I can against the tides. I'm not trying to predict the tides. I expect to be suffering in the...
Oh, go ahead.
If you're going to invest in stocks for the long term or real estate, of course there are going to be periods when there's a lot of agony and other periods when there's a boom. And I think you just have to learn to live through them. And as Kipling said, treat those two imposters just the same. You have to deal with daylight and night. Does that bother you very much? No. Sometimes it's night and sometimes it's daylight. Sometimes it's a boom, sometimes it's a bust. I believe in doing as well as you can and keep going as long as they let you.
And don't get Charlie started on what he thinks is the impact of passive index fund investing on stock valuations, because he says,
oh, huge. That's another thing that's coming. We have a new bunch of emperors, and they're the people who vote the shares in the index funds. Maybe we can make Larry Fink and the people at Vanguard Pope. All of a sudden, we've had this enormous transfer of voting power to these passive index funds. That is going to change the world. And I don't know what the consequences are going to be, but I predict it will not be good. I think the world of Larry Fink, but I'm not sure I want him to be my emperor.
And in my first video where I shared the highlights of Charlie defending the decision to invest Daily Journal's cash in Alibaba, he also answered a question about how he would advise individual investors to invest. And it's a lot like how he invests in a very concentrated portfolio, which includes Chinese stocks like Alibaba and also Berkshire, Daily Journal stock, and also some of his favorite bank stocks and apartment buildings. But there was another slightly different question about how would he advise young people to invest who are considering either settling on only dividend stocks or swinging for the fences with growth and tech stocks, to which he answered,
well, I don't think I have a one-size-fit-all investment I think some people are gifted enough that they can invest in hard-to-value, difficult things. Other people, I think, would be very wise to have more modest ambitions in terms of what they choose to deal with. So I think you have to figure out your level of skill or the level of skill your advisor has, and that should enter the equation. But to everyone who finds the current investment climate hard and difficult and somewhat confusing, I would say welcome to adult life. And you're thinking the right way. Of course, it is hard. It's going to be way harder for the group that is not graduating from college now. For them to get rich and stay rich and so forth, it's going to be way harder for them than it was for my generation. Think what it costs to own a house in a desirable neighborhood in a city like Los Angeles. It's not and I think we'll probably end up with higher income taxes too and so on. No, I think the investment world is plenty hard, and I don't think in my lifetime, 98 years, it was the ideal time to own a diversified portfolio of common stocks that updated a little by adding the new ones that came in, like the Apples and the Alphabets and so forth. And I'd say the people got maybe 10 or 11%. If you did that very intelligently before inflation and maybe 9% after inflation, 8 or 9%, that was a marvelous return. No other generation in the history of the world ever got returns like that. And I don't think the future is going to give the guy graduating from college this year nearly that easy an investment opportunity. I think it's going to be way harder.
And then when Charlie was asked about what worries him and makes him feel optimistic about the economy and the stock market, Charlie actually remarked a lot about human psychology and got at the root of human misery in saying,
well, you have to be optimistic about the competency of our technical civilization. But there again, it's an interesting thing. If you take the last 100 years, 1922 to 2022, most of modernity came in that 100 years. It's amazing how much achievement there's been in civilization in these last 200 years, and most of it in the last 100 years. Now, the trouble with it is that the basic needs are pretty well filled. In the United States, the principal problem of the poor people is they're too fat. That is a very different place from what happened in the past, that they were on the edge of starving. And what happens is, it's really interesting, is with all this enormous increase in living standards and freedom and diminishment of racial inequities and all the huge progress that has come, people are less happy about the state of affairs than they were when things were way tougher. And that has a very simple explanation. The world is not driven by greed, it's driven by envy. And so the fact that everybody's 5 times better off than they used to be, they take it for granted. All they think about is somebody else having more now, and it's not fair that he should have it and they don't. That's the reason that God came down and told Moses that you couldn't envy your neighbor's wife or even his donkey. I mean, even the old Jews were having trouble with envy. And so it's built into the nature of things. It's weird for somebody my age, because I was in the middle of the Great Depression when the hardship was unbelievable. Yet everybody wants to have a pretentious expenditure, and that helps drive demand in our modern capitalist society. My advice to the young people is, don't go there. The hell with the pretentious expenditure. I don't think there's much happiness in it, but it does drive the civilization we actually have. It drives the dissatisfaction. But the general feeling about how fair it is has gotten way more hostile. And as it gets better and better, people are less and less satisfied. That is weird, but that's what's happened.
And probably an appropriate follow-up is someone saying that he looks like he's extremely happy and content, and what's his secret to leading a happy life, in which he answered,
Well, I always say the same thing: realistic expectations, which is low expectations. If you have unreasonable demands on life, you're like a bird that's trying to destroy himself by bashing his wings on the edge of the cage, and you really can't get out of the cage. It's stupid. You want to have reasonable expectations and take life's results, good and bad as they happen, with a certain amount of stoicism. There'll never be any shortage of good people in the world. All you got to do is sink them out and get as many of them as possible into your life and keep the rest the hell out.
My biggest takeaway from Charlie here is that we should be grateful for what we have to overcome the effects of envy, and also that we should know that we can always keep learning and arm ourselves with new skills so that we can set out to achieve anything we want to, and then that will help us to not be jealous or not covet someone else's things, and we can get our own things if we try to work hard at it and if we deserve the success, as I'm gathering from Charlie. So if you enjoyed the wisdom from Charlie Munger as much as I did, please be sure to like and subscribe to my video and YouTube channel, as I'm sure that the wisdom that you heard from Charlie today will help you make better financial decisions so you'll have a better and brighter financial future. Till next time.